Your best staff person is doing the math. Let me explain what I mean by that. Carter reports that solo-founded businesses now account for a third of all new US ventures, up from a quarter. In tech, that's the story of ambitious founders building AI products. In accounting, it's different. The barriers to starting a CAS practice were already lower than in any other professional services field. No product to build, no venture capital needed. Existing client relationships from your current firm? The only thing that historically kept talented senior accountants from going independent was the production overhead, the volume of work that actually required a team. And AI has almost eliminated that barrier. A skilled senior with Claude or ChatGPT and a few other AI subscriptions can now automate many accounting functions. They can prepare financial statements, draft client communications, and run advisory analysis. The practice management overhead compresses too. Your best person doesn't need your office, your software stack, or your admin support anymore. They need a laptop and the client relationships they've been building on your behalf for the last 3 years. So the question isn't how to prevent departures. It's sharper than that. It's what does your firm offer that they can't build on their own? And here's the part that stings. The practitioners who are best positioned to go independent are the ones you developed. The staff who have built professional instincts and learned to trust them. The ones who have experienced what genuine analytical autonomy feels like. The ones who've used AI to test hypotheses and develop findings with confidence. Every instinct confirmed. Every finding that carried weight. Every time they directed AI to produce something they're proud of. These are data points, not just of their growing capability, but of their decreasing dependence on your infrastructure. We've been talking about this for the last few days. The confidence building process that makes them better practitioners also makes them more capable competitors. And Nate Jones, who studied this pattern in the tech world, puts it really bluntly. He says solo founding isn't just about ambition. It's often a symptom of organizational failure. People leave because the company couldn't give them the environment to do their best work. If your talented senior is spending half her week waiting for partner review, navigating consensus layers and sitting in meetings that don't really require her presence, she's doing the math. And the math is getting easier every quarter. So here's what separates the firms that keep their best people from the firms that lose them. 4 things a solo practitioner can't easily replicate. The first is accumulated context. Your firm has years of encoded client knowledge, quality systems, correction histories, and methodology built across dozens of engagements. Every rule you've documented. This client has a timing difference in Q1. This industry requires this treatment. They compound into institutional intelligence that a solo founder starts without. A solo practitioner rebuilds context from zero with every new client. Your firm's compounding knowledge base is an exponential advantage, if you've already built it. The second is a confidence-building environment. Solo founding gives you autonomy. It doesn't give you peer calibration. A staff member testing a hypothesis inside your firm can bounce it off colleagues with deep domain knowledge, compare their read against other informed perspectives, and develop professional judgment in a way that isolation doesn't allow. Earlier this week, I talked about the private testing ground. AI is the sounding board for professional instincts. That works best when it's layered on top of a peer environment where findings are discussed, challenged, and refined. The third is editorial infrastructure. If your firm has built quality systems that surface exceptions, triage workflows that focus partner attention where it matters, and processes that move clean work forward without bottlenecking, your practitioners spend their time on judgment work, not production. That's attractive. A solo founder has to do everything. Production, quality control, client management, business development. Your firm offers the luxury of focus, but only if it's rebuilt properly. If your firm is still bottlenecking everything around the partner's desk, the solo founder's all-in-one model might actually be faster. The fourth is scope of ambition. A solo founder can build a practice. A talented practitioner inside a well-run firm can shape how the firm serves hundreds of clients, develop new service lines, and influence strategic direction. The ambition channel is broader inside an organization. but only if the organization means it. If a staff member has an idea for better advisory deliverable or a new approach to client onboarding, does the firm say, go build it? Or does it get stuck waiting for the next partner meeting? The firms that channel ambition retain it. The firms that defer it will lose it to someone else's firm or to a solo practice. So here's the diagnostic that matters. Strip away salary, benefits, and the comfort of a regular paycheck. Those are real, but they're not retention moats. The sharper question is this. If your best person left tomorrow, what institutional advantage would they walk away from that they couldn't rebuild independently within 6 months? If the answer is your accumulated context, the encoded knowledge, the quality systems, the compounding methodology, that's a moat. If the answer is your development environment, the peer collaboration, the confidence-building infrastructure, the scope to pursue ambitious ideas, that's a moat. If the answer is not much beyond a salary, you don't have a retention problem. You have a value proposition problem. The firm hasn't built anything worth staying for. But here's the good news. This is buildable. Every piece of context you encode makes the firm's knowledge base harder to replicate. Every quality system you design makes the editorial infrastructure more attractive. Every time you let a staff member pursue an idea with confidence and resources, you're widening the ambition channel. Every peer interaction where professional judgment gets tested and refined adds something a solo practitioner can't access alone. The firms that keep their best people in an era of easy independence won't do it by constraining them. They'll do it by building something these people can't build on their own and making sure those people know it. If you're ready to transform your firm into one of those places, that's where the AI Practice Transformation Program comes in. It's a 3-week implementation program that walks you through firm-wide operational redesign, from how you structure context to how you build the kind of development environment that actually retains your best people. You can learn more at theaiaccountant.ai/transformation. What would your staff lose by leaving? If you don't know, they probably don't either. And they're doing the math. We'll see you tomorrow.